Hey everybody, it's Brett with your weekend crypto market update. I want to just give you guys a quick wave like we do every week and go ahead and dive into the charts here. I want to cover a little bit of news, so we'll just dive into that real quick and I'll turn off my camera here so we can see a full screen. So let's see what we've got here. A little bit of news just to kick things off. Obviously, we had a bit of a reaction to the CPI numbers this week. We'll look at the charts here in a moment and then a little bit of a rally there. So now some people are saying that was a short squeeze. That's what I was seeing in the charts also. So I'm a firm believer in, as you've heard me say, show me the charts, I'll tell you the news. It did look like a short squeeze. And so again, the CPI numbers came in a little bit hot. We saw an initial drop down, a drop off on all of that. So we can kind of see that here on some of the short-term charts and down right there. And then we rallied back up to this resistance line. So that's looks like it's going to contain this little bounce here. Some other news: crypto scam victims seeking to hold Coinbase responsible. So more FUD in the markets. It's just, this is going to continue as this market matures. So we'll see how that plays out. Just doing a quick scan on the crypto panic here. And we're seeing some news here, basically what we already see in the charts here, basically traders saying that if we can't hold the recent lows here around 17,600, that the low of 2022, if we can't hold that, obviously it's going to go much lower. So I want to talk about that a little bit. So let me close some of these windows here just so we have some more to look at. And let's see. So I had opened this up here, but I had to restart things. This is the monthly chart. I want to just start here. We have been watching this over the last few weeks. We did close below this important level here around 19 or 20,000 rather, and that was holding for these 3 months. And so this was almost a bearish engulfing candle. It didn't quite get there on the monthly, but then this last month, September, this is very bearish candle here did hold this line here, so we're kind of waiting to see if this line will hold again. But the fact that we're kind of at a indecision point, it's kind of a spinning top is what this is called. So we need to see how the monthly candle plays out. Very important. So if this monthly candle closes down and below this sort of trend line here and is in the red, then I would suggest say we are going to head lower. And I've been watching the 16,500 level as a temporary bounce point, but I'm feeling that we will probably head down. And new information equals new decisions. So I don't want to speculate. It's just this economy is very weak. There's no good news out there. And it would not surprise me at all to come down and retest or test this 14,000 level before it's all said and done. That's the high here from the July or June 19, 2019 month, and also was a sort of support resistance area right in this region back in October 2020. So we'll look at the weekly chart next. To have a quick look at that, I'll just open this up and look at the MACD as we did. It does seem to be softening and putting in a bottom slowly. Now we're not there yet, but we can see this. This is kind of what I'm expecting to see happen, not in terms of the timeline. Actually, let me redraw this because to be more time accurate, I think early part of 2023. So we'll probably see some kind of recovery like this. The on the monthly basis, this drawing tool doesn't work as well. So this is most likely what we'll see coming into the first and second quarter of 2023. But we'll have to wait and see. It is breaking as of this point this downward slope and evening out. It can't go down forever. So that's the good news. And so let's go ahead and jump over to the weekly here, and then we'll get into some of the daily and more timely, really the short-term time frame. So here again, so on the weekly basis, we've been watching this 300-week moving average, and so it does seem to be holding there, which is encouraging. The 200-week had previously been strong support in the prior market cycle low, as we saw back in here, again right there with the flash crash, which did temporarily on the weekly basis go all the way down to that 300-week moving average where it held. So it's that's why it is holding here, seeing some strength, but this 200-week now acting as resistance. So while it's certainly possible we sort of go along here a bit and then go higher, instead of doing a drawing, I actually wanted to show I had overlaid a pattern from a prior market cycle that would indicate a possible scenario. And so far this has been following this fairly closely. And so if this were to pan out, we saw initial push back up and recovery, came back down and retested lows. It's still a little bit higher, so we're technically putting in higher lows here. So if this 300 week can hold here, we'll know that in the next week or two. If we start to see this push up, I would imagine that we'd see a brief push above the 200 week, followed by a pullback down below it, and then we could see this kind of breakout. So where would I think that we are going higher and we put in a bottom? I would say above 25,000, right in there, a close above 25,000, which would be this 200-week moving average. So this is certainly possible and in the cards, but remember that when we saw this, or just call your attention to when you saw this pattern down in here, there was a more of a positive economy. It was recovering from the 2018, the economy was fine. We didn't have the economic forces and inflation, etc. So while this is a scenario that could play out, we certainly could see a drop down here to this 13,000 level, 14,000 level, which would be the 400-week moving average, and also coincide, as we looked at on the monthly, with this 14,000 level here, which was the high of back then. So this is an area of confluence that, if we do get down that low, that would be an excellent buying level between the 10,000 and 14,000 range. And so we'll keep an eye on that. What we need to watch right now is, does this level hold? Does this 18,000 level hold? Let's call it 17,600, which was the low prior back here. So all eyes are going to be on that. A couple things though, in terms of the stochastics RSI, this is the RSI rather, we're in this downward trend, also watching this on a weekly basis if it can close back above. If it's going to close up in this area, then that's pretty bullish, but I would suggest, based on the way these things typically work, that we certainly could come down and test this again and then break up higher in the early part of 2023. So that's what I'm looking for. Of course, reserve the right to be wrong, but this is what I anticipate we'll see, and another pull down to the downside. Also on the stochastics RSI here, seeing this downward lower highs on these. So it's trying to break up higher, but until we get back above this, I don't think we will. More than likely, we'll see another cycle down here and maybe put in another, maybe a higher low, or even come down to this level before really bottoming. So that would be expected just based on the markets, that market structure there. I am seeing a bullish early reversal indicator on, this is one of our proprietary indicators. So this is interesting to me, but unless this trend strength indicator turns green and starts breaking up above the 20 line, then I would be bullish for a short-term swing, and would imagine we go higher for a bit. But again, this downward trend line is holding the price action, holding things down. So that's a bit to look at all at once. But this is bullish. If this can turn green again, that's slightly bullish, and we would then see these break up higher. But that's what I'm waiting for. So I'm not recommending any long positions right now until this plays out. If we jump over to the daily, still waiting for the bear flag. This was the flagpole, the flag, and then it broke down here, came back up, hit this as resistance, and now it's holding this line here. It's still technically in a slight uptrend. We nearly saw this level break down here, which was yesterday, but it did rally back up. And as we saw in the news article, that could have been some short covering. I think what did happen, the volume came in heavy on this green bar. That could have been the short squeeze, certainly. People loading up the shorts on this and with leverage. So that's a great time for the bulls to come in and the whales come in and really cause some pain to the bears. Anytime there's a lot of leverage open positions, then that's usually a time where we'll see some reversal. And as they drove this back up, the shorts scrambled to cover, and so basically we're right at an even point. So it's still looking at this trend line, want to see where this closes. This could languish here and then ultimately turn higher. Just don't know yet, but if we were to see the measured move play out on the downside of the bear flag, that puts us right down in this 12,800, 12,900 range, or this box here, which I've drawn from the 12,000 to 14,000 range as a possible accumulation zone. And just to turn these back on, let's see, one of these charts I had the accumulation zones turned on. So let me see if I can find that. Might be a different chart. And so let's see, click around here. I've got a number of these, so we don't have any one of them too complicated. All right, well, let's see. That could be, I'll find that, but essentially the point is this, that zone down below is where I would be looking for possible accumulation. So let's take a look at the 4 hour. This is interesting as well. So we saw this thing push up again, that short squeeze. A lot of bullish volume came in, strong volume, and that we haven't seen in a couple weeks here since back here in, say, September. So pushed it back up higher. Now it's a little bit unclear. I've got a better chart for this though, to look at here. Let me pull this up. This is the short-term time frame, and let me put it up a bit. So essentially, we're trending down here as of now. Came out, tried to break this 20,000 level again. This is the 1 minute chart. We can see it on the 3 as well, and broke down, back down. I do want to pull up the 15-minute chart briefly. This is one that I watch, and so on the 15-minute chart, I like to use a 200 period simple moving average as a barometer of, are we generally bullish or bearish? And so you probably haven't seen this before. Let me turn off the average true range and make this easier to read. But back here, so essentially when we're above, when Bitcoin is above this purple line, again, this is a 15-minute chart with a 200 period simple moving average here. So you can see I've got it at 200 and style is purple, and that's a simple moving average here. It's a good barometer when it's above, and that's typically bullish. When it's below, typically bearish. It does tend to act as a magnet pulling things back in at time to time, but you can catch some good macro trends. Like for example, up here, broke up, failed this 15-minute here back on September 13th, and then it just stayed down below it for some time. So the point of this is it keeps trying to get up above this. However, this trend line here is resistance. So I know we're kind of jumping around a bit, but let me get back to the daily to show you where we're being held at on this chart with, this is the one I think we should look at there. So if we, let me take off the channel here just so it's easier to see, but clearly we can see the upward trend line kind of holding price action. And let's see, I've got a number of these on here. It looks like, okay, there it is. So basically this line here. So this is containing price action. What we have here is a symmetrical wedge forming. So it's either going to break to the top, the upside or the downside. And, remains to be seen. So I'll just zoom in on this a bit so that if we see a break above this, again, I think there's still this resistance trend line here. We'd want to see a break above the 21,000 for it to hold. I think if we did get up to 21,000, there is another case to be made for that. Could be a quick pump and then a drop, and based on a Fibonacci retracement to the golden pocket here. We'll look at that on a shorter time frame. But if we do start breaking down below this lower trend line, back below 19,000 and 18,000, then likely we'll see this bear flag kind of play out. I would imagine that we'd see some support here by the bulls around 17,600. If we can't hold that, then we're on the way down to 14,000, I believe. Okay, so let's take a look at that on the shorter time frame. This is the 4 hour with basically two things I want to show here. Let me open this up. Two things. The Fibonacci retracement from the swing high back here, again, September of 2022 down to this low, which we hit back in here September 21st, and retested this yesterday. So this Fibonacci, let me get rid of that. This Fibonacci retracement here would put the golden pocket retracement right up here in this 21,000 range, and that's the 0.618 to 0.65 range. A pretty common retracement bounce area. It had already come back up and tested the 50%, which we saw here. So this may or may not play out here. I was suggesting that this could rally up here and then reject this 21,000. Again, to look at it on the daily is this resistance line from this upper trend line. So nothing, not looking terribly bullish here. I also want to pull up our custom indicators, which are rolling over. Our trend strength indicator. This is one of our proprietary indicators that at some point maybe we'll tell you guys how to get access to that. But I want to run that by Max, and but at any rate, this is this is bearish. If this closes today and this is a red signal, then we are going to head down lower here, back to this 18,000s, back in the 18,000s is my read on that. And so on the shorter time frames, again, rejecting at this trend line down here. So we'll see if it holds here at that 15-minute. and a clearer image here on that upper trend line on back to the 4 hours rejecting here. So not a whole lot to looking bullish here, you guys, and so we'll kind of keep an eye on things. Let me jump over and we can look at some coins and see if anything's moving higher. I do want to just pull up the US dollar dominance, USDT dominance. It's kind of riding up this trend line here slowly, not much happening. The DXY did kind of pull in a little bit, hitting some resistance up here, but I don't think it's, it certainly could continue to push higher and push crypto lower. Total market cap is below 880,000. This is a line I drew a couple weeks ago, and certainly I think this is still in the cards, guys. If we cannot break it back above this downward trend line here and starts to break down below this zone, this accumulation zone from back in this region, then very likely will drop down into the $500-600 billion range. This would be an excellent buying opportunity if we do get down there. I believe we will, but we have to go with what we see and what actually happens. But I think my spidey sense is telling me this does weaken and we break down here before we start seeing a kind of meaningful recovery, and to see that bleed out a little bit more. Couple outliers, most everything's down today. Polygon Matic have a little bit of a push higher here, but still, needs to break above this trend line resistance there. And let's see a couple other things. Most things are down. Atom is curiously up a bit, but it's breaking down from its upward trend channel. So I do believe it's forming a new trend channel and will kind of revert back to the lower range of this. So basically nothing bullish here that I would recommend sitting on the sidelines here until things sort of settle and play out and stabilize. I could go through these charts, but they all look pretty much the same. Things are looking weak, and so it is not looking terribly good. So, guys, I think it's a good time just to sit on the sidelines and wait and see how these things play out. So, hopefully that is helpful. We will continue to keep an eye on things and keep you updated here weekly. And so if you like the content, hit the like button down below. I'd love to hear your comments down below, and make sure you subscribe to the channel if you're watching this on YouTube. And we'll talk to you again next week. Take care, everyone.